Right now, the average home in Toronto costs over $1,050,000, and prices are falling. Meanwhile, Montreal's average is $649,000, and prices are rising. That's a $400,000 gap, and it's getting wider. If you're a homeowner in Toronto or Vancouver sitting on $1 million or more in property and you've not looked at Montreal, you're leaving money on the table. And I'm not just talking about relocating, I'm talking about investing. Because what your equity can do in Montreal right now is unlike anything available in the rest of Canada. Today, I'm going to show you 3 things: what your Toronto budget actually gets you in Montreal, why investors from outside Quebec are buying here, and what you need to know before you make the move. Because Quebec is a different world, and the brokers who tell you otherwise are setting you up to fail. Let me show you something that will change how you think about your money. I'm going to compare 3 price points: $800,000, $1.2 million, and $1.5 million, and show you exactly what each one buys you in Toronto versus Montreal. At $800,000 in the Greater Toronto Area, you're looking at a condo, a 2-bedroom, 2-bathroom in a decent area, or a dated townhome in the suburbs. No backyard, possibly with parking? In Montreal, $800,000 gets you a 3-bedroom detached home in Montreal West with a private backyard, a garage, and your walking distance to some of the best restaurants in the city. Same money, completely different life. At $1.2 million in Toronto, you can get a semi-detached in a decent neighborhood, but you're competing with 10 other offers, and you're probably waiving conditions. In Montreal, $1.2 million puts you in the Sud-Ouest or NDG, 3 to 4 bedrooms, a proper backyard, mature trees, walking distance to everything. That is the kind of home that costs $2.5 million in Rosedale or Forest Hill. At $1.5 million, Toronto gives you a detached home in a mid-tier neighborhood, maybe Leslieville or Danforth. Nice, but not extraordinary. In Montreal, $1.5 million gets you a heritage home in the Westmount adjacent NDG, a small detached in the town of Mount Royal, or a luxury home in the Sud-West. And here's the kicker: those price comparisons assume you're buying. But many of the people I work with from Toronto are selling a $1.2 to $1.5 million property, buying in Montreal for $800,000 to $1 million, and pocketing $300,000 to $500,000 in equity, which they either invest, use for retirement, or put towards a rental property. That is the move that nobody talks about. The price gap alone is compelling, but what makes this a strategic play, not just a lifestyle choice, is the 2 markets are moving in opposite directions right now. Toronto, the average home fell 3.9% year over year in the latest data. The condo market is particularly rough. Inventory is piling up and investors are underwater, and analysts expect prices to continue declining 3 to 4% through the rest of 2026. That is not a dip, that's a trend. Montreal is the opposite story. Single-family home median prices hit a new all-time high. Plex prices are up 8% year over year. The average home price rose $649,000, up 4%. Forecasters are projecting another 5% appreciation for the year. So think about what that means if you're a Toronto homeowner. Your asset is losing value, while Montreal's is gaining. Every month you wait, the gap between what you can sell for in Toronto and what you need to buy in Montreal gets less favorable. I'm not saying panic, I'm saying the math has a direction, and it favors moving sooner. And before anyone says, well, Montreal will slow down too, maybe. But the Desjardins outlook for Quebec acknowledged that while momentum may moderate, Quebec's housing market has consistently outperformed the rest of the country. The fundamentals are different here: a diversified economy, constrained supply, strong rental demand, and relative affordability that continues to attract buyers. Now let me talk to the investors, because you do not have to relocate to Montreal to take advantage of this market. A growing number of buyers I work with are Toronto and Vancouver professionals who keep their jobs, they keep their homes, and buy investment property in Montreal because the numbers simply work. Here's why. Montreal has something that Toronto and Vancouver cannot offer at this price point: plexes. A duplex or triplex, where you buy one building, collect multiple rents, and the rental income covers most or all of the mortgage. In Toronto, a comparable income property costs $1.5 to $2 million, and the rent barely covers the carrying costs. In Montreal, you can buy a Plex for $700,000 to $1 million with a rental income that actually makes financial sense from day one. And the rental fundamentals here are strong. 2 years ago, the TAL, Quebec's rental tribunal, approved the highest allowable rent increase in at least 30 years at 5.9%. Vacancy rates in key neighborhoods are below 2%. You have a deep tenant pool driven by universities, hospitals, tech companies, and government. The demand for rental housing in Montreal is structural. It's not going away. I will give you a real scenario. Say you're a Toronto professional with $200,000 in equity or savings you want to deploy. In Toronto, $200,000 gets you a down payment on a $700,000 condo that cash flows negative. You're paying out of pocket every month and hoping for appreciation that is not coming right now. In Montreal, $200,000 is a 25% down payment on an $800,000 triplex. 3 units, combined rental income of $4,000 to $5,000 per month, covering your mortgage and building equity in a market that is appreciating. Same capital, completely different outcome. And if you want to go even further, there's a strategy called the Smith maneuver. We have a full video on it. That lets you make the interest on your investment loan tax deductible. Layer that on top of a Montreal Plex, and you're building wealth on multiple fronts. Rental income, appreciation, and tax savings. That is a powerful combination. I'm not just talking theory here. I personally own 70 units in Montreal. I manage over 350 of them. I built a 9-unit building from scratch. I invest my own money in this market because I believe in the fundamentals, and I see the same opportunity for anyone willing to look past the Toronto bubble. Now here's where I need to be honest with you, because a lot of content about Montreal makes it sound like you can just show up and buy the way you would in Ontario. You cannot. Quebec is different, and if you do not understand the differences, they will cost you money. Number 1, the legal process. In Quebec, real estate transactions close with a notary, not a lawyer. The process is different, the timelines are different, and the closing costs are structured differently. The welcome tax, Quebec's land transfer tax, is significant, and it scales steeply at higher price points. On a $1 million purchase, you're looking at approximately $15,000 in welcome tax alone. Budget for it. Number 2, language. Bill 96 has strengthened French language requirements in Quebec. As a buyer, this does not prevent you from purchasing property, but if you are investing and becoming a landlord, your lease agreements and certain communications need to comply with Quebec language laws. In terms of daily life, Montreal is genuinely bilingual in most neighborhoods. You can live comfortably in English in Westmount, NDG, the West Island, TMR, and many other areas. But knowing some French makes everything easier and opens more doors for you. Number 3, if you're buying a rental property, Quebec tenant law is very different from Ontario. The TAL governs rent increases, lease transfers, and evictions. You cannot just raise rent to market whenever a tenant leaves. There are rules. You need to understand the lease assignment process, the renovation eviction restrictions, and the annual allowable increase calculations. This is not a reason to avoid investing here, it is a reason to work with somebody who understands the system. Bad surprises happen when Toronto investors apply Ontario logic in Quebec. Number 4, taxes. Quebec has higher provincial income tax than Ontario, which matters if you're relocating and earning income here. But property taxes in Montreal are generally lower than Toronto. And if you are investing remotely, keeping your Ontario job, but owning Montreal property, the rental income flows through your Quebec property, but your personal tax situation stays in Ontario. Talk to a cross-provincial accountant before you make any moves. This is not DIY territory. I've spent most of this video talking about money, but let me take a minute to talk about why people actually stay in Montreal. Because the lifestyle is the part that turns a financial decision into a permanent one. Montreal is consistently ranked one of the most livable cities in the world. World-class food, and not at Toronto prices. A real cafe culture. Access to nature year-round. The mountain, the waterfront, the eastern townships an hour away. Festivals and cultural events that other cities dream about. Walkable neighborhoods where your kids ride their bikes to school. And here's the thing nobody mentions. Because housing costs less, you actually have money left over to enjoy the city. In Toronto, a couple earning $250,000 spends 50 to 60% of their income on housing. In Montreal, that same couple can own a premium home and still travel, save, invest, and actually live. That quality of life difference compounds over a decade. Let me be direct about who this makes sense for and who should stay put. This move makes sense if you're remote or hybrid and not tied to a Toronto office 5 days a week. If you have $200,000 or more in equity and want it to work harder, if you're a family looking for more space, better schools, and a slower pace without giving up city life. If you're an investor who's tired of negative cash flow in the Greater Toronto Area and wants actual returns, or if you're simply ready for a different chapter. This move does not make sense if your career requires you in downtown Toronto 4 or 5 days a week. If you're not willing to learn even just a little bit of French, look, you can get by without it, but you will be missing out. If you're buying an investment property without understanding Quebec tenant laws, this is a problem for you. And if you're looking for a quick flip, Montreal rewards patient, strategic investors, not speculators. The gap between Toronto and Montreal is real. It is backed by data, and it is not closing. It is widening at this time. Whether you're thinking about relocating your family or deploying capital into a market that actually makes financial sense, Montreal deserves a serious look. If you're in Toronto or Vancouver and you want to understand what your equity could do in the Montreal market, book a call. I will walk you through the numbers, the neighborhoods, and the Quebec-specific details you need to know. No pitch, just an honest conversation about whether this move makes sense for you. The link is down in the description below. If you found this valuable, share it with someone who is thinking about their next move. Subscribe for more Montreal real estate content, and I will see you in the next one.